Welcome back to the channel. My name is Cole.Shelton. We are going to be covering my potential swing trading plays that could plan out within the next week, 2 months to come. I stopped making these videos a few weeks back due to personal reasons, but we called PORG for 300%, Coinbase for 45%, CrowdStrike Gaming for 20%, and SESN for 50%, and many more. In this video, I'll be covering the technical reasons on why I'm watching this stock, my potential take profits and stop losses, so you'll get my entire trade plan. And if this video does well, I'll continue to make videos like these, so make sure to hit that subscribe and like button down below. But let's go ahead and jump right to the charts. The first stock on my swing trading watch list is going to be NIO. Now, the whole EV sector has been absolutely pumping, with Tesla absolutely ripping, Rivian absolutely pumping, LCID pumping. So I think NIO also has the potential to pump here. Plus, we're entering in a nice wedge formation with this top trend line and bottom trend line. So I would be looking for a crack to the upside here from NIO. Again, I'm not going to take this short or take puts. If we do crack the trend line to the downside, I'm just going to let it be and look for a bottom and look for a potential re-entry. Now with this stock, I want to see us pull back the end of this trend line, and if we do not, then this trade, I guess this trade plan won't work, but you could build a trade plan around it at the breakout. So I would be looking to buy potentially around this $36 area to this $35 area. Once we see a nice bounce off the trend line with confirmation, your stops would have to be below this previous low at 32.50. Again, break that low, you got to cut it. But with the opportunity to potentially gain back up to this previous high of 23%, and then potentially back up to 55 or 53%. So you have your stop being below 32. So in this area, you're risking around 9% in order to gain 23% for your first price target. Now, that already is more than a 2-to-1 profit loss ratio. But we obviously have more room to the upside, and it's how long you're willing to sit in this trade and how long if you're doing contracts, if theta is going to mess you guys up. We also have a key support level at this level at 34.80 with 1, 2, 3, 4, 5, that's zones, 6, 7 different touches, 8 if you count this wick. So I would expect it to pull back and touch this zone again. And in this box and trend line, we have two reasons to actually jump into this trade with the wedge. There's 3 with EV stocks already pumping, and I expect NIO to do the same. There's 4. The next stock that I have watched is AMC. Now, I shit on AMC a lot, but it does have a very nice wedge formation similar to NIO, but AMC has the hype behind it, has traders looking at it, has traders just anticipating this breakout. I'm sure these trend lines are drawn on thousands and thousands of traders' computers. So with AMC, I would be looking for a breakout play in this situation. We're kind of getting tighter and tighter and tighter. If you were looking to buy a bounce off this trend line, your stops would have to be below this previous low at around 35.80, and I mean it could be lower at 33.50 below this previous low as well. And you'd be looking to buy between $39 and $37 for the bounce. Now, you're risking around 13% for the potential to gain 20%. There's for that first high. Then you have this 38% at 52.86. Break that high, and we are most likely coming back up to $60. So there's 57, 60% right there from AMC. I'm also going to be watching Zoom for the potential break of the downtrend. We have 1 touch, 2 touch, 3 touch. It looks like we're kind of building up on that trend line. So I would like to see us maybe find a bottom, maybe double bottom before breaking this trend line. We have 1 touch, 2 touch. I would be looking for a 3rd touch here. I mean, this is already the 4th touch, but since this is so steep, I would be looking for the 5th touch with the break. So I expect it to potentially pull back to around 224 or this previous low, maybe 225, 226 for a potential bottom. Then look for a double bottom with confirmation with increasing volume on the break for the downtrend. If we do see it stop around 225, your entry would be somewhere in this area with a nice double bottom. Your stops would be below that double bottom, so somewhere in here below 220. You're risking around 5%. First target is going to be that previous high, which is 19% away. And the next high, which is that 27 to 28% away. And if the volume continues and we continue to move, we have a gap to fill all the way back up at 340, which is very unlikely. but we will be taking our profits as it moves higher because it could still happen. Again, one of the big profit taking strategies, that is the 200 SMA, and that's what this green line is. So that will be a big portion of my investment will be taken out at that price level. With this increasing volume to the downside, we have 4 days in a row now which have been red. I would not see us having a bottom until around 225, maybe even 220. So definitely wait and don't jump the gun there. The stochastic is also heading to oversold regions. So let's see if we can get that to start bouncing back and maybe start building up at the top. Now, using the FinViz scanners, I was able to find DGLY with a float under 50 million, a relative volume over 2. We saw a nice spike. It seems like we might get some momentum in the next few weeks to months to come. Relative volume over 2, target price is 50% above what its current price is at. And that's currently at $2. And what I would be looking at for this play is a potential momentum play, potential double bottom. You can play this so many different ways. A nice double bottom, maybe off the 50 SMA here, or a double bottom off 114 off this previous low. Your stops will be below this previous low or below this low. Or if we crack $1, it depends on your risk tolerance, depends how much you're sizing in. It's all relative to you and what you're looking to potentially gain. We have extremely high volume on Friday's close a couple days ago, and very light volume on this pullback. So I am actually looking for another potential day where we're just kind of consolidating, not really moving. I want to see decreasing volume, maybe a nice double bottom or higher low for the move higher. In your first targets, if you do buy off the 50 SMA, will be, again, this 160 level, this first trend line, or this first high at 150. That's going to be a key level to crack, is 150. Crack over 150, you have room up to 160 where the 200 SMA is. Now, when the 200 SMA is very, very key. If we're below, we're usually bearish. If we're above, we're usually bullish. But in this case, I am bullish because I do believe we're going to continue to crack the 200 SMA, come back, retest, and potentially reach these highs, maybe back at $190 to $2, and then potentially even $220. And from that same FinViz scanner, I did find SPI, and I am looking for it to come back to those previous highs. We are getting a nice spike in volume, and we're seeing that with the news as well. We're seeing that SPI energy shares up 4.5% Thursday. Notable trader Twitter account, Antonio Costa. SPI energy issues 4.2 million, 10% convertible promissory note with $20 per share conversion price. I'm not really too sure, but 20% a share in the news is a very good article. And the target price for SPI is still 50% above SPI, if not more. This decreasing volume pullback is what I really like to see. A nice lower wick off the bounce of the 50 SMA. Your stops in this case have to be below 475 or $5. Your potential could be back to that 200 SMA. Let's say you buy in somewhere in this area, looking for it to kind of just consolidate, maybe have a really nice bounce back to that 200 SMA. There's 15-16% right away. And this decreasing volume pullback is what I really, really like to see. And then we could potentially come back to those previous highs of around maybe $8.79, which is 60% away. We broke out of the trend line, and now we're coming back with a successful retest of the 50 SMA. The 50 SMA might squeeze us back over the 200 SMA, and then we'll finally stay over the 200 SMA and be bullish, potentially ride that all the way back up to these highs at $11. Thank you guys so much for watching. If you haven't already, consider subscribing. It's free. You can always change your mind. I do videos like this every single week. I cover my top cryptos that I'm watching, weekly lessons so you can learn how to trade, do technical analysis, invest. I will also keep you up to date on cryptocurrencies. So I will see you guys in the next one. Peace.